Hello everyone. Thank you for joining us today. Thank you for attending. Thank you for fxstreet.com to giving me the opportunity to speak. My name is Telmo Pinto. I'm the founder and director of market operations at Intuition Trading Group. For those who aren't familiar, we are a team of professional traders dedicated to provide simple, real-time, unified trading solutions for investors. So let's move on here on the slide. It's important to read here the disclaimer. Any alerts or any levels or trades I alert during the webinar, they are not a solicitation to invest, and you should carefully consider your financial situation prior to making any investment, okay? It's preferable to seek advice from an independent financial advisor if you have any questions or concerns. Just to let you all know that we have automated trading signals. They are automated to the MT4 platform. You can see more details at the web page on the slides or at our website, intuitiontrading.com. As an fxstreet.com client user, you have a 10% discount on the fee. Okay, just go there and see our performance. If you have any questions, just please contact us. I'm more than willing to answer all your questions. Okay, so let's move on here to the platform. Today, as you know, the US markets are going to be closed due to the Sandy storm. This can lead to some problems, okay, on the market. So there is a lack of volume on the market. In the morning I was talking with some of my broker. They alert me that for the less than 15%, okay, of the 50% of the volume was trading at the market. So during these days, okay, it's preferable we see if we have a very good trade, or unless, okay, it's preferable you step aside from the market, wait to see what Sandy will bring to the US. As you know, is the they are talking that is the storm of the century. 60 million people can be affected, so is 1/6 of the U.S. population. So, okay, we need to be alert for this situation. As you know, we are on October 2, 25 years from the big drop on the U.S. markets. So all this can really affect the market. So it's preferable we be alert for this situation. Although, as you know, the European and the euro is mainly affected by that too, but we have some problems on Spain and again on Greece, that the German and the European Bank was not in agreement to the bailout of Greece, okay, to not pay it to the creditors. So all these markets are really nervous about all this situation. Although during this month we have a high range on the markets. Okay, for those who aren't familiar, I present here, these are the Renko bar charts. Okay, on the left, sorry, we have the 21 pips Renko bar chart. Here on the right, this is the 34 pips Renko bar chart. Okay, so let's go to the 34 to see the beginning of the month and the end of the month, and you will see that, okay, since the huge up from the after 6 September, the ECB meeting and the non-farm payrolls, after this huge move, okay, market enter here on a huge range. Okay, let me draw here the range to see. This is the range. Okay, this is a high range on the market. I read some reports during the weekend. that this is killing the most of the traders, and I believe because these range are not good to trade at all. Okay, because we can be catch on the tops. Okay, we can buy on the tops and sell on the bottoms. So we need to be alert for all this situation. The line is not here. Sorry, let me. Okay, I prefer to delete here. Okay, this is the range now. Okay, this is the huge range we have. We go from the 128 till 131.70 level, 70.80 level. Okay, from the beginning of the month, let me draw here the beginning of the month is about here, is this line here. Okay, this is the beginning of the month, more or less. Okay, yes, this is the beginning of the month, maybe one bar earlier. Okay. Okay, this is the bar of the beginning of the month. As you can see, you have here up move, then another down move, a fail to retest, then try to test the highs, and then a retrace. So, what we can see now is that, and looking rapidly to the, okay, looking fast to the chart, is that, okay, Euro try to make at least test the highs, was not able, sorry, and then drop. Okay, mainly we can expect, okay, at least market test this level, the 128.50 level, the 128 level. If market breaks this level, we can see a fast move till here, 126.50, 126.20 area. Okay, this is clear because we don't have here, this was a fast move up, so the support here are not well defined. There are not supports here. Okay, we can go to the 127. Okay, because is a even number. Okay, but if market can break the 128 level, we can see a stop about 127.40 area, 2040 area, and if can break, it can go to 126.50 area. Okay, clearly. Although, if we go here to the 21 pips, okay, the 21 pips is a faster one, we can see that, okay, market can, let me amplify this, market here on the second drop gain momentum, then try to make up move, but was stopped by these bars here. As you know, these are the support resistance. As on the Renko, we can see clearly these support and resistance areas. So market break that level, couldn't break that level, sorry, and then another fast move. Now is on hold here to this level because, as you know, if break this level here, and when I consider a break is 1 bar at least, okay, it's a break of 1 bar. If break this level, and this level is a go to at least 128.70 area, we can see a clearly test of the 128. Okay, and that can bring some problems. Okay, so this is the scenario we can see for the down moves on the euro. But let's go here to the order book. Let me open here the order book. If you can see clearly, okay, is here. If you can see, let me put this on English. Okay, Nat, Zoom. Okay. What we can see is that first, the majority of the traders here are long. Okay, you can see here for the open positions. Let me put here all. Okay, but we usually see the euro at the bottom, okay, at the mid, from the mid table, okay, near the bottom or 2-3 positions up. But now euro is almost at the mid of the table, and this is not good for the longs. Okay, this is not good for the buyers in the market. Okay, we can go now to the order book, and we need to think is, and like I explained here plenty of times, is who will lose more money now? Okay, will be the buyers or will be the sellers? Okay, in this case, the buyers will lose more money, so the probability is for market going down. Okay, the higher probability is for market going down. Although we have this level here, okay, let me show orders only. These are the open orders, and the open orders are not realized on the market. Okay, this is mainly for us to see where are the stops from the players. We continue to see this blue line here. Let me annotate here. Okay, we continue to see this level here is the 132.50 level. We see this level for more than a month now. Okay, and this level, what is telling us is that only if market goes there, or only if market can go to 132.50 level, the majority of the players, or the majority of the investors, long-term investors in this case, okay, swing trading, only at that level are willing to give up from the short trades. Okay, so we know already that the 132.50 level is an important level for market. Although we have now this situation here, and those stops, that blue lines that are there, those stops, in my opinion, they are needed to be clean, okay, in order to market are willing to gain more momentum to go down. Okay, so we can see, or we can expect at least they go to 129.20 area, 30 area, before we see a drop. Although that can happen, okay? So if this happen, we know that if we are short at the market now, we don't want at all to have our stop loss at least in the range of the 129.20, 129.30. We want that our stops will be higher than that. Okay, and why? Because we can see that market can clean that level here, okay, that can clean that level, and then there are no more stops ups, okay, and then market go down again. So we need to protect from this situation. And the best to protect is we put our stops above this level. Okay? Let me open here now all the positions. Okay. If you have any questions, please feel free to write on the questions and answers or on the chat board here. Okay. So on the left we have the open orders. On the right there are the open positions. Okay. These stops that I showed earlier, these stops are mainly, in my opinion, okay, the stops from these players here. Okay, these players, this green line here, these are the sellers that have that stops on that level. So if we see, let me clean this, if we see if these sellers are stopped around 129.20, 129.30, okay, can go to 40 level, so it's preferable to put our stops above the 129.50 level. Okay, market lose these sellers here, can accumulate more buyers, okay, and then continue the down move. Okay, but clearly what we have now is an imbalance on the price, This is unbalance of the price that the majority of traders are willing to sustain his long trades here, are not believing that market could drop. And we see this, we saw this many times now, that when we see this, market have the higher probability to go down from here. So let's go to our platform here, so we can finally define the levels, and we see that if there is any agreement, let me put here the 21 pips, delete this. So what we see is that the stops are at this level here. The stops go to this level. It's preferable I put a shape here. The stops can go to this level. Begin here 129, above 129, and can go till 129.50 area, more or less. 40-50 area. So if you want to continue, if you are short, if you want to continue your shorts, you want to put your stops above this level here. Your stops need to be above this level here. So if you are not short, in my opinion, the best entry is if we can see a break of this level. If you can see a break of this level, and the break of this level is the break of the 128.80 area, if you can see a break of this level, we can go short, risking about 2-3 bars, but we can have a good risk reward. If market can break the 128 level, a good trade here. If you are not short already. For the long side, I prefer need to see a break of the 130.20 level, this last a break of this level, in order market are really willing to go up. On this level here, I'm not willing to go long. Let me draw here a rectangle. On this level, I'm not willing to go long. Because the risk reward is not good at all. And you know that trading is based on the risk reward. If we have a 1-to-1 risk reward ratio trades, we can have a very good equity curve, and we can win in the markets. If you have a 3-to-1 risk reward, if we lose one trade, we need to win 3 trades in order to go to break even. So this is the money management, the first concept of the money management we need to have. What is my risk reward ratio trade? So, this can go up, and we can have a good trade, but the risk reward compensate? No, not at all. So it's preferable we wait. If market breaks that level, we'll go retest the 130 for sure. The 130.20, and at that level we can have an entry, a low risk entry, in order market go up again. So there is plenty of trades to make every day. So we don't need to chase them at all. So my position now is that if we see a break of the 130.80 level, this level here, if we see a break of this level, I'm willing to enter short, expecting a break of this level, a break of this level, and see at least price go first to 127.40, and then probably market go test the 126.50 level. Okay, so this is my view now on the euro. Don't forget about the Fendi storm, okay? About the resolution on the euro. This week is complicated because it's option expiration week, and okay, there are some problems that if the U.S. markets don't open till Wednesday, okay, they don't know when they will open because they don't know the effects of the Sandy storm. So this will be a complicated week. Okay, if you are not completely sure that okay you have a good risk-reward ratio trade, it's better you step aside. Okay, you stay aside of the market. You can see, but okay, next week will go better for sure. But if you want to trade, okay, these are my levels that I'm going to watch during the week. Okay, next Friday we will not have the in the money webinar because of the non-farm payrolls. So it's okay. It will be a complicated week. So my opinion, and I want to reinforce this, is that if you are not completely sure that you have a good risk-reward ratio trade, please step aside. Okay, the risk will not compensate for sure the profits you might have. Okay, so I will call it the webinar here. These are the levels. Okay, the webinar will be recorded if you during the week need to go here and see again the levels. Okay, so let me open here just to let you know. Let me open here. Okay, just to let you know if you have any questions. Please don't hesitate to go to our page at fxstreet.com. Okay, here's the web address, or go to our website at intuitiontrading.com, or email me at tradingdesk@intuitiontrading.com. So I hope you'll all enjoy the webinar. If you are in the west coast of US, okay, good luck. Okay, everything went good. So hope you see you all next week. Thank you very much for attending. Thank you for joining. Have a rest of nice week and have a nice day. Okay, thank you. Bye.